Hello, everyone, and I hope you're well. Welcome back to another episode on the Crypto Princess channel. Today we have Piano Matty B with us.
How's it going today?
It's going good. It's going good. You guys can hear me, can't you? I didn't have an issue with my mic last time I was on.
I can hear you loud and clear.
Awesome. So today's the first day that you're going to see me in what is it called, Matty B?
4K.
4K. 4K. My brother-in-law bought me a camera. So you've all seen me before, but this is what I look like in 4K. Awesome. So today we're going to be discussing some of the things that get people wrecked in crypto. But before we do that, let's have a look at the live stream. Let's see who we've got here. So we've got Brian. Welcome, Brian, and Jesse, and Mark V, and Fairground. Welcome. We've got Chipper. Welcome. Barranco, welcome. John Legend, welcome. We're just going down the list. Oh my God, we talk a lot because I've been in the chat as well. We've got Rob C, welcome. We've got Chipper, welcome. We've got Lauren, welcome. And we've got Craig, welcome to you as well. If I have missed anyone out, do let me know. Yeah, if I have missed anyone out, do let me know. And let me just quickly put the chat on the screen as well. So the chat will be on the screen. So Piano Matty B, thank you for coming back onto the show. We've already collabed together. We did your crypto story, which was amazing. Thank you for sharing that with us.
Thanks for having me.
Awesome. So we're going to talk about why people get wrecked so much in crypto. Now, this is a really good subject to talk about with Piano Matty B because you're so such a people person, and you're always talking to people. You're a musician. You're always out there. So people enter into crypto mainly not for the tech, not for the innovation, nothing like that. They enter into crypto mainly for making money. But we hear time and time again, repeatedly, people losing money, both investing and trading. Let's talk about investing first before we get on to trading. So, Piano Matty B, investing is I'm sure you'd agree with me. Investing is very different to trading. Investing is like watching paint dry, grass grow. If you invest, say for example, 1,000 US dollars back when Bitcoin was $1. Right now you'll have 1,000 Bitcoins. That's investing. It's a long-term mindset. It's a long-term mindset. Now, there's two different ways. Two different strategies to investing. There's DCA and lump sum buying. Do people really understand investing, Piano Matty B?
Well, I think people's investment journey is always different. There's always a need that instigates the journey. And I think for most, depending on that need, let's say it's, out of necessity, they need a lot more money somehow. That's probably the wrong way to enter into investing. But it all comes down to time preferences. And you can learn a lot about this from Saif Dinamoose's book, The Bitcoin Standard. But it's so important to understand your time preference. So a low time preference means long. So you could exchange low with long. And a high time preference means short. You could exchange high for short. So most people come in with a high time preference, and it's usually linked to their compensation in life, so to speak. So most people that have a job that pays them bi-monthly or monthly, that is by definition a high time preference. They know that by the time, the first of the month comes around, that bank account will be cha-ching and they'll have that check there. And from there on, their 30 days, they deplete it until it gets to zero because they know it's coming back. So the habit grows as a high time preference. So then to exchange into investing, and this is why entrepreneurs are generally better investors, because they're used to getting into something putting all their time and effort and money with no guarantee of anything coming back. And essentially, that in a nutshell is investment. There's no guarantee that anything's going to come back, but you have faith and you have conviction in whatever you're investing in. And as you do more of it and you spend more time watching the price go up and down, you get used to the ride and you slowly realize, and this takes a long time and for me, it took a lot of money I had to lose a lot of money to get here. And that was the most important and expensive lesson, but I wouldn't have the discipline to wait out the crypto volatility if I hadn't learned that years before in trading currency. Now I have it, so I sleep easy. I don't care where the price is because my low time preference is locked in with my investment strategy and its legacy. So I have a son who's 9 years old, and all this investing I'm doing is essentially for him. So it's once I say that, it's very easy for anyone to go, well, that's easy. You're going to look in 10 years out. So when he's 19, that's 10 years from now. That's really my time preference. And even at that, I still don't think it's that short. It's basically my whole life because I'm up here in Canada. So selling what into Canadian currency? Like our currency is so shitty. I mean, for me to sell anything into the Canadian currency, it's just absurd. So that the fact that our currency is so worthless makes it easier for me to just sit here and hold, right? And at the end of the day, even when 10 years comes and it's time to maybe take some lifestyle chips off the table, things will be different. I don't think people will be selling Bitcoin in the next 3 to 4 years. I think once the institutions come in, people will be able to borrow against, and we hear that a lot. It always comes up at the frothy part of a bull market, but that's what it's going to be. So and it's also going to add to diminished crypto winters and whatnot, because just basically the retailers won't have the necessity to sell. And as I'm talking, I realize I forgot what the question was.
It's okay. It's okay. I was talking about DCAing and lump sum buying into crypto for investing. Do people really know how to DCA into crypto? What I tend to find is people, they say that they're DCAing, but technically what they're doing is they're lump sum buying at random times. What do you think of that strategy when you just DCA as and when?
Well, DCA is the best way to invest because it does lend to a long time horizon because you're taking the emotions out, right? So as an investor, it's an emotional roller coaster because, ask anyone, as soon as you buy, it goes down. As soon as you sell, it goes up, right? So once you take that out and I look at Bitcoin, and this is a simple way that I describe it to everyone I talk to. It's just a savings account. So instead of putting my excess fiat currency into a bank that immediately takes a bit, every month they charge me for a bank account just for the privilege of having a bank account, I put it into Bitcoin. Everything that goes into the bank account is going to zero, and everything that's going to Bitcoin is going up. So once you look at it as a savings vehicle, dollar cost averaging into Bitcoin just makes all the sense in the world. Now, lump sums are all relative, right? So there's a couple things. When people are DCAing with lump sums, it's not the worst aspect to DCA. However, it leans towards the notion that when a better time to dollar cost average is than someone else. So you're still trying to play the market, AKA maybe you're smarter than the market. And what happens is through time, you realize that you're not smarter than the market. You're not going to outsmart the market. And even if you do a couple times, that's great. But it's kind of like going to a casino and having a great night of blackjack. If you walk away, you'll tell everyone that you know how to play blackjack and you're the greatest blackjack player in the world. And then you go back the next day and they just take it all, right? So dollar cost averaging with the same amount is about the most disciplined way to invest in Bitcoin as you can. Now, if you do little lump sums, there's a guy named James at Invest Answers, and I always watch him. I think he's great. You should check him out if you haven't. Anyone watching here, go to Invest Answers. He calls it dollar cost averaging on steroids, and that just means waiting for pullbacks. You know, it's a little more sophisticated, but it's not like you're trading. It's kind of as simple as, you know, that the price goes up, it's going to come down. Like right now we're at 108.7 and was at what was it, 110.5 yesterday. You know, so dollar cost averaging on steroids would be okay. It was a nice pullback. I'll get in here. But at the end of the day, dollar cost averaging with a set amount is the best way to do it. I tell everyone to do that. My family, my friends, everybody. Do they listen? No, but we're here.
Nobody ever listens to us. We're like the crypto weirdos. Oh my God. But this is the thing, in front of us, like I can't say it enough. And I say it to my family as well. Like in front of us, we have the greatest asset that's ever existed. And yet we're, you know, a lot of people, you know, in my family as well, they want to go into stocks, they want to go into shares, they want to do all of this. And I'm just like, look, we have the greatest asset. And even if you look at it in a certain way right now, and I'm sure, I know you're on X as well, again and again, every single day, we have multiple posts of companies raising billions, not millions, billions of US dollars, not for marketing, not for, you know, advertising, not for expanding, not for, you know, adding new products or adding new lines, but to buy Bitcoin. And DCA has never, ever failed. With Bitcoin, and if we just look at Bitcoin, we'll look at alts a little bit more when we look into trading, because technically there is no guarantee that a specific altcoin will be around in the next 30, 40 years, but Bitcoin will be. So if we look at Bitcoin itself, how important is it to have a long-term mindset with Bitcoin, or do you think Bitcoin is fine to trade as well?
Well, to me, it's funny to trade Bitcoin because it is the most amazing asset humanity's ever come across, right? So to sit there and trade it in and out, it seems crazy to me. Because like, so for instance, people will ask me, well, are you going to sell your Bitcoin? And to not round trip, because we've all round tripped. And once you do it a couple times, hey, it's part of the ride, right? But like, I would never gamble. Let's say, for instance, 112 was the top. Okay, I'm going to sell all the Bitcoin I have. I'm going to wait for the bottom. I would never do that. It's too risky because we are on the precipice of a monetary paradigm shift. Everything's changing. So imagine telling, you know, your kids, your grandkids, yeah, I had some Bitcoin back in, you know, the bull run of 2025, and it hit 112. And, you know, I just thought I was smarter than the market and I was going to sell it at the top and I'd buy back at the bottom. Unfortunately, although all the fundamentals were screaming that every single hedge fund, every single asset manager, every single country, every single nation state, every single pension, every single state in the US was planning to buy Bitcoin, I gambled that it was the top. And guess what? I was wrong. And it exploded to $1 million. And after that, I went into a deep depression and never thought about Bitcoin again. I'm not going to do that.
No, you feel me. I'm exactly the same. I've said this a million times. My Bitcoin is for my great-great-grandchildren. That is for my lineage. That's for my bloodline. You know, in 100 years, they're going to have a painting or a statue of me. And I often say they're going to call me the Bitcoin granny. But I have an altcoin bag, and that's for me, and that's for me to live on, and all the, you know, all the rest of it, for me to get rich on, if that makes sense. So, okay, so with Bitcoin, long-term mindset, buy it, keep it. And honestly, I don't know why people trade Bitcoin as well. You have you know, there is, we are already in a digital gold rush when it comes to Bitcoin. And for anyone who's been on the channel, they know how much I talk about scarcity, and they know how much I love Bitcoin, and, you know, all my views on Bitcoin. And world adoption of Bitcoin and industrial adoption of Bitcoin and all the rest of it. Now, just very quickly, I'm going to play, before we get into trading, because there's multiple different ways of trading. I'll go into them actually now. So trading is like an umbrella. So you have scalpers. Scalpers can take dozens. Oh, and a big shout out to Alex, so crypto. I saw him in the chat a little while ago. So scalpers can take dozens to hundreds of trades every single day, and what they do is they look for tiny, tweeny movements on the chart, and they scalp those prices to earn a little bit of money, and then it's more about over time their bags build up. And it's the same with day traders. Day traders always close their they close their trade in a 24-hour day. They don't leave it on overnight. Then you've got swing traders who will leave their trade on overnight or a couple of weeks, and then you have position traders who keep their trades on for months, if not years. So just very quickly, I do have, and I can't remember what short it was, but let me play you guys a short. One moment. Who makes more money in crypto, investors or traders? Well, crypto traders buy and sell cryptocurrencies frequently, hoping to make big gains, but it's risky because crypto is so volatile. Trading requires a lot of time, skill, focus, and discipline. Crypto investors, on the other hand, buy and hold cryptocurrencies for a long time. Investing is like watching grass grow and paint dry. Investors' profits might not be as dramatic or as fast as traders in the short term, but just imagine buying Bitcoin at $1 or Ethereum at 30 cents. Overall, who makes more money, investors or traders? Well, it largely depends on a person's skill, risk tolerance, strategy, timing, and overall market conditions. Subscribe for more crypto fun facts. Okay, so that's some of the differences. When we look into trading, now we're talking about alt bags as well. Risk management, piano, Matty B, because I know you were a trader for a good while. So we always talk about risk management when it comes to trading. Is one of the most important things that people need to understand and do in trading. How easy is it to follow a strict risk management plan, and why do we see people not following their rules?
It's incredibly difficult, and I have a lot of unpopular takes on trading that I get a lot of pushback from, and people don't like to hear it, right?
I want to hear it.
But I always say, like, the legacy of my channel, when it's gone and when this is all over, is that I hope people remember that I told them to never trade. The reason I say that is that it's a rigged game, the exchanges. So there's a thing called an A book and a B book. We play the A book is like what we like. We feel like we're in an even playing field, and that no one knows our take profit or our stop loss. But that's just, it's insane to think that the exchange you're on doesn't see the data you put in. That's called the B book. And if you get in there and you scalp tiny little trades, you know, $100, $1,000. And once you get into $10,000, you start to get a little bit of a target on your back. These exchanges that allow you to trade with them, these perpetuals, they're not there to make you money. They're there to take all your money. They're like a casino. And the reason why I say don't trade is that I've met incredible traders that were 10x the knowledge and experience that I had before I stopped. And I did as well as anyone could probably try to do as a trader. Now, there's a couple things here. The reason why I did quit is that the A book, B book fixed aspect of stop loss hunting. And when I was talking about stop loss hunting back in the day, it was a conspiracy theory. You know, it's like, you're paranoid. You know, why would they be hunting your stop losses? And I'm like, well, it just seems that every stop loss I have gets hunted. But the reason why I got out of it is that every amazing trader I ever met, some of them mentored me into
Mhm.
some fast knowledge that would have took years. You know, the greatest thing is to be mentored by someone, especially in trading, because they can take you from, you know, losing all your money to losing some of your money. But the reason why the big paradigm shift for me was that all of them, multi-millionaires too, some of these traders blew up their
Gosh.
accounts. They all got wrecked eventually. And the reason why they all eventually got wrecked was due in part to breaking their rules, because the psychology of fear and greed is not only, it's leaving money on the table sometimes is a harder aspect to rectify than getting out of the trade. So when you have your take profits and your stop loss, that's just to mitigate the emotional swings, you know. So a take profit is a great aspect to get out of the trade. You made your profit, you're out, and now you wait for the next bus. The stop loss is a great way to close out a trade and you're done. You don't have to sit there in the weeds wondering forever, is this price going to ever come back? So it's just to mitigate the emotions. But what happens, and it's a creeping line in the sand with the fear and greed, is that every time you take profit, you start thinking, I could have had that take profit a little higher. I know my
Yeah.
rules are mathematically set, and that's why I do as well as I do as a trader. But I think next time I'm going to put it up a bit, because yeah, I just think I'm leaving money on the table. And this creeping aspect, it goes down with the stop loss as well. It's like, maybe I should keep that stop loss a little higher. I just thought, I think I'm losing money and leaving money on the table with that stop loss. You start moving your rules. And then this is the best case scenario, where as your rules start moving, you start getting wrecked more on your trades. You have losing trades. Now, important thing that I learned in the poker business is that the most profitable poker players, we're talking about the Daniel DeGranos, all these legends, basically they win about 57% of the time. You know, they're not sitting there winning every pot. They're not at 80%. They're not at 90%. They're at 57%. And so how they actually make a profit is mitigating their losses. But what happens is, when you're trading, you start thinking you're leaving money on the table, and then, well, why not even bring it in leverage? So leverage is another sneaky little thing that starts. So now you start with, like, say something conservative, like, you know, a 3x or a 4x, and then you have a decent run of winning trades. You're like, I'm leaving money on the table. Let's go to 5x. Then you go to 5x and you start having some winning trades, maybe not. And you start thinking, I'm leaving money on the table. You know what? I'm going to try 10x. Why not? I see all these rock star traders on YouTube doing 10x. Hell, they're doing 50x. I'm going to do 10x. And then as soon as you start breaking your rules, that is the beginning of the end of your trading career. And then eventually you will blow it out. Now, what happens sometimes, which is even more devastating, is that you do the same trade. Let's say you're so disciplined and you have this mathematical formula for every trade you do. I used one called knees and elbows. So for instance, I make it this long story short. I feel I'm rambling already. So let's say a price is going from 0 to 100. Well, I'll get in at 15 and I'll get out at about 75, and I'll take that chunk. And that's all I want. I'm good with that. Right. That was my knees and elbow theory. But what happens is that eventually everyone breaks out, everyone gets wrecked. I don't want anyone to lose money in trading. I just know from my experience that most of them do. Now, if you're watching kind of the rock star traders out there that are trading real time and stuff, maybe they've made all their losses already and they're so skilled that they've just got it honed into like a science. But however, this is where even a fine-tuned science can wreck you. If you're trying to trade, here's one guarantee. If you're not doing it 24/7, you will also get wrecked. So one of the things that you don't probably see, like with these big traders in YouTube, is that they live it 24/7. And one of the reasons I got out of it back in the currency trading days is that I couldn't live it 24/7, because that's how you can never leave the trade. You can never leave the charts. You can never leave the fundamentals. You can never leave what's going on geopolitically around the world, of what's going on with like Jerome Powell, all these speeches, all these announcements. You have to live it 24/7. A lot of people think that they can just get into trading and do it as a part-time gig. Well, I work 8 hours a day and I'll come home for 2 hours and I'll trade. It's like, no, you can't do it. Ask anyone that's in the trading game. It's a 24/7. Like, if there was more hours in the day, they would do it. If there's more days in the week, they would do it, because you got to stay above that. And beyond that, I always call, there's only a few pros, and the pros are the insiders. So when we say, for instance, the CPI report's coming out, I don't know, Thursday, let's say, and we're like, I wonder what's going to happen. If it's a good print, well, maybe the price will go up. If it's a bad print, maybe the price will go down. So if you're asking yourself what's going to happen with this announcement, you're not a pro trader. The pro traders already know. There's insiders everywhere. There's insiders on the phone. There's insiders at the bank. All these people. The reason why it's kind of like the character in Casino, Lefty Rosenthal, or maybe it's the Bobby De Niro's character. He was such a good sports bettor because he knew all these inside things. Like, he says it in his monologue. He knew if the quarterback's girlfriend was cheating on him. All these weird things. These are insider information that the pros know. So if you're ever wondering if you're a pro, you just have to ask yourself, do I know what the announcement is going to be? And if you don't, then you're not a pro, unfortunately. I mean, this is why it's I get pushback from this, because everybody wants to be a trader. I get it, because when you're trading, it's a certain degree of financial freedom in a weird way. It's like you no longer have a job, but you go from, let's say you have a normal job working 8 hours a day and you become a trader. Well, you just traded an 8-hour day for 24/7 for the rest of your life. There is no part-time traders. There's no part-time traders. And if there are, I don't know, I've never met one. And if there are that I haven't met, I bet you they don't do that well.
Yeah. Okay, awesome. Because we're talking today about things that get people wrecked, and we will get to that big question, what's the biggest thing that gets people wrecked? Another thing that gets people wrecked is timing the market. So in the last few years, the best time to buy Bitcoin, or the best time to get into cryptocurrency, was in November 2022, which was the bear market bottom. People try to time the bottom again and again, sometimes months in advance, and the market keeps dipping again and again, and people get wrecked. Is this greed that makes people want to time the bottom?
And it's, to a certain degree, it's arrogance to think that when the bottom is or the top, right? So, I mean, again, if you're wondering when the bottom is, there's a little bit of, like, it's easier in the crypto cycle than it is in any other stock or legacy TARDFI, because generally there's a rule of 500 from the top, 500 before the halving is a good area to get into. And I have October 2026 based on the halving on 2024, when we will start to round that bottom. Right. So to think that you can actually pinpoint the bottom or the top is, I guess it's to a certain degree, it's arrogant, but you can loosely target like a shotgun's blast where the bottom will be. For me, it's October 2026. Now, that's not the pinpoint of the bottom. That's my shotgun blast of where the shrapnel will appear at possibly the low end of whatever crypto winter we enter in. Now, will we see the same crypto winter as we did before? I don't know. I think things are different. the investor is no longer a speculator. They're not trying to get in and out. Maybe, but we'll have to see. Until the cycle's broken, I'll always believe in it.
Yeah, I know. Black hat team, trading is fun, just not with my money. That's so funny. Just very quickly, let me just shout out a couple of people who have come into the chat. Now, I do apologize if I miss you out, and Rob C, I think I shouted out before. Lauren, Alexandra G, Chipper, Brian, Mr. Alex, Storyteller, welcome. Black Hat Team, Crypto Coin Mindset, welcome. I don't know why Black Hat Team keeps popping out at me. Every time I go past his name, I'm like, I've got to shout out Black Hat Team. Craig, Cool Buddy, welcome.
Can't forget Dave Digital.
Yes, Dave Digital, welcome, brother. Poman, and David, welcome. I think that's everyone. If I haven't shouted you out, just let me know. Okay, so that was time in the bottom, and I must admit, I do agree with you on that one. Let's talk about emotions. Emotions are another thing that gets people wrecked in crypto. How do emotions get people wrecked in crypto, and what is the most dangerous emotion in crypto? Just before I do that, I've actually got another short. Let me just play my little short. 1 moment. Let's talk about FOMO and greed. Both of these emotions can be detrimental in crypto. They are associated with taking irresponsible, irrational, impulsive, and sometimes absurd trading decisions. FOMO stands for fear of missing out. It's that fear, that anxiety one has that if action is not immediately taken, a good opportunity will be missed. Greed is another negative emotion in crypto. It can influence people to take larger positions or to buy crypto with money they cannot afford to lose. Greed can go uncontrolled in the parabolic phase of the bull run. People get sloppy, they relax their risk management strategies. This is why we sometimes see traders suffering their worst losses after their best performing year. Subscribe for more crypto fun facts. So these things that I'm playing, they're shorts that I do on my channel. I haven't had enough time to make more shorts. There's like 67 of them. I will be adding to them in a while. But Piano Matty B, what are your thoughts on emotions, and what is the most dangerous emotion in crypto?
Well, it's hard to say because fear and greed to me are basically the opposite ends of the same type of motivation. And it's like an addiction. So if anyone's ever smoked or had a even deeper addiction, there's a strange thing that happens inside you. There's a voice that starts to F with you, that starts to rationalize your behavior. So for instance, smoking. I remember back in the day when I was a dumb kid, I used to smoke. And when I was quitting it, it was an interesting journey to hear that voice. Like, well, who's trying to make me stop smoking or start smoking? So like you go on a vacation and then the voice will say, hey, you're in Mexico. Why don't you have a couple cigarettes? You deserve it. You've worked hard for this. You deserve to have I'm not going to tell anybody we're in Mexico. It stays in Mexico. You go back to Canada, you stop smoking again. All these weird things. Who is this voice that's compelling me to do this? It's the same voice that creeps up in fear and greed. The top of the market, when we start getting greedy, I'd argue it's harder to get out to sell at the top than it is to buy at the bottom. But what you start thinking is like the voice comes in and says, oh, are you leaving money on the table? You really think it's a good idea to sell here? Well, the fundamentals say it's going to keep going up. I don't know. And at the bottom, it's the same voice. It's like, well, could go down lower. Why do you get in here? Think about it. Let's go back to 2022 November. It's at 18K, let's say. The voice is like, a lot of people saying 10K. You know, think about how that's a 50%. You can get half as much Bitcoin, twice as much, really, if you look about it. So maybe we'll hold off. Huh? That voice, it's the same. It's an addiction voice. So it's hard to get over that. And I don't think it ever goes away. You just get used to the jibber jabber of it in your head, and you know it's not listen to it, right? But it takes time, and it takes experience, and it takes wisdom. And unfortunately, sometimes it takes losing a lot of money to stop listening to it.
Just very quickly, a special shout out to David and Rob C. It's their birthday today. So happy birthday. I'm so sad. I wish I had like a birthday chime that could Oh,
Can you hear that piano?
I can.
Happy
That's really
birthday
good.
to you. Happy birthday to Rob C. Happy birthday, dear Bobby C. All Roberts to me are Bobs. Happy birthday to you. Happy birthday, Robbie C. The only reason I did that is I saw someone say he can't really play the piano. To a certain degree, you might be right.
So yeah, Rob C and David, happy birthday to you both. Just very quickly, we've got M Ninja in the chat as well. And I did shout out John Legend before, but I know he might have been away from the screen at the time. Let's talk about scams now. This is another way that people get wrecked in crypto. And I actually have a little short that I did on scams as well. Let me play that short. By the way, all of these shorts are on the YouTube channel. One moment. Currency scams are the same as other financial scams, except the scammers are after your crypto assets. Phishing scams. Phishing scams are designed to lure you into clicking links from which the scammer can access your cryptocurrency assets. These links can be sent to you. They can be posted in groups or on websites. Pump and dumps. A pump and dump is another classic scam tactic. This is where scammers inflate the price of a cryptocurrency project through hype and misleading information, only to sell their own bags at a profit, dumping the price on genuine investors. A rug pull. A rug pull is where the creators of a cryptocurrency project abruptly abandon it, taking all the invested funds with them, leaving investors high and dry. Subscribe for more crypto fun facts. I love my crypto fun facts. I really, really do, because I got a lot of information in such a small space of time, and you can go through many of them and learn a lot. So, Piano Matty B, you've been around for a while. What are some of the most common types of cryptocurrency scams that lead people to get wrecked? And how can people spot red flags in projects, in scammy projects?
Well, now another unpopular take that I have that I get a lot of pushback about. It's easy for me. It says anything with a human is probably going to zero. And that's how I judge. I call altcoins only coins. It's like OnlyFans, really. It's the low hanging fruit. It's the most enticing, seductive aspect of the crypto market that usually takes. So if you think about OnlyFans, who are they appealing to? Is like, kind of the desperate of the desperate, and they're taking all their money, right? So these only coins, essentially they promise something that doesn't really exist yet. You buy into it. And in my experience, most of them generally trend to zero, if not just completely rug to zero. Now, do some people make money on them? Sure. But again, it's probably the insiders. It's probably the people that know more than you. If you don't know where it's going, you're probably part of the exit liquidity. So for me, it's very easy. I've always said I'm not a Bitcoin maximalist. I'm not a Bitcoin maxi. I'm a human minimalist. So anytime I see humans involved with anything, even with their best intentions, like I was talking about with trading, you can do everything right. Eventually you'll make one mistake. I do think that most of these altcoins run by humans, even on the road to hell is paved with good intentions. Something will go wrong and it'll eventually go to zero. And we've seen it in the cycles. We're still one of the black swans for this bull market, besides retail going Betty by, is the alt season. I feel like every time I go on X, it's like, where's the alt season? When are we gonna have an alt season? When are we gonna have an alt season? Because historically, this is what brings retail in, is the pseudo promise of immense riches for doing nothing in an altcoin, right? And so are we going to see it? I don't know. To me, if we see the death of alt season and people just become more hardened Bitcoiners, I would take that as a win-win.
Okay. So there's a lot of different coins, a lot of different projects out there. Some of them have like massive communities behind them. To me as well, if I'm completely honest, long-term wise, it's just Bitcoin. I don't know what's going to be around in 10, 20 years. So a lot of my money is in Bitcoin. I do love Bitcoin. Let's talk about market movements just before we go to TA, and then we recap what it is that gets people wrecked the most. So people are always advised to diversify their portfolios. So sudden market crashes or black swan events don't wipe out their entire portfolio. Many people don't listen, as we both know. Many people don't listen. How do flash crashes in cryptocurrency catch traders off guard? We're not talking about investors. Investors have a long-term mindset. They're looking for the next 5, 10, 20 years. But traders, position traders, swing traders, how do market flash crashes catch them off guard?
Well, it's just the classic scam wick, right? So you have these people that are leveraged in their perps, and the exchange can't release the hounds to the upside if they have a majority of people in 10x longs, and they all know they're where their stop losses is. So that's why you see these scam wicks just go boom, bop, and knock all the traders out, and then the price usually moves up. That's essentially what holds back, when people are saying that the price is being suppressed. Well, it can't really move. These exchanges can't lose hundreds of millions of dollars giving it to these leveraged longs. So they have to go in there and they got to scam wick it down. It's just part of the things. Like, you may think it's a conspiracy theory or not, but it happens all the time. And it's just one of those things. And I also think, moving away from altcoins into hardened Bitcoiners, I think we're going to see that as we move forward to a lot of the retail that were, I don't want to call them traders, but more, let's call them day traders. If anything, they're getting into the market, getting out. I think they're going to move to more long-term holders as well, where they just ride it out like an old school degenerate Bitcoin hodler.
Gosh, yeah. I mean, these small-term market movements, they don't really bother long-term investors. Okay, let's go to, but they can wreck traders. Let's go to TA now. TA wrecks a lot of people. We're having a very bearish live stream today. Another thing that wrecks a lot of people is TA. And also being in the market 24/7, watching the charts too much. It does take around about 2 years, or that's what I keep hearing. Everybody says it takes 2 years to learn TA. Can being in the market for too long, 24/7, doing TA again and again, watching the charts, can it be a bit too much? And can it lead to impulsive decisions, especially revenge trading?
Did you say revenge trading?
Revenge trading.
Yeah, that's a good term. No, I don't think it's a necessarily a bad thing. When it comes to TA are just probabilities, and there's no guarantee on what the charts say, right? So there's that old cliche, show me the news and I'll show you the TA, or show me the TA and I'll show you the news. What it does help with, it's like when you're starting charting, you look at everything. Everything seems to be a signal, right? There's a lot of noise going on, and then you start putting in all these indicators, right? So I've seen some people with charts like it do with everything, volume indicators, MACD, stochastics, everything, telling them basically the same thing. And then as you spend more times with the chart, it's like driving. So when you're driving, your mind is interpreting a million things at once. Stop sign coming up, merge over here, horrible driver coming up on my left. This is a school zone. It goes down to 30. All these things are being computed and you're not even thinking about it. You're probably singing a song. So it all gets put into this pipe. And the longer you look at charts, the more you kind of zen out and understand where the trend is, rather than, this channel of ascension breaks down 75% of the time. That's great. But I mean, if you're not shorting it, who really cares? If you're not buying the breakout, who really cares? If you're in a long-term hold, well, all of it just kind of reinforces narratives on upwards or downwards trends.
Okay, awesome. So we've had a very bearish live stream today, but we wanted to know about all the different ways that people get wrecked in crypto. Just very quickly, on Thursday, same time that this live stream begun, I actually have an interview with, let me see if I can get him, let me see if I can actually share the screen. One moment. Here we go. Can you guys see that screen? I'm not sure if you can. Anyway, this is Ronnie. It's a crypto story. He's a German trader. He lost 500K, 500,000, $500,000 $500,000 literally in 10 minutes. Bless him. And the way that he did it, and there's so much to this story, so I'm gonna just tell you a tiny little snippet. The way that it happened was he had a trade on. It was very, very public. He's a very good trader. Loads of people know him. He left his trade just for 10 minutes only because his wife had just come out of surgery and he needed to go and collect his son. And he left that trade for 10 minutes. And in the space of those 10 minutes, he will tell you exactly the same. In this story, he tells you the exact date, the time, and exactly what happened for him to lose that money. And then his comeback story is that he made, bless him, he made $5 million the next year. And what makes it even more impressive is he lost the $500,000 in the bull run. He made $500,000 in the bear market. How do I stop sharing the screen now? There we go. There we go. Okay, first time for everything. Okay, let's go and back to our final thoughts.
Before we do that, that's a perfect example of you can do everything right, for a long time. And then you make that one mistake. That's why I say, no matter how good you are, you eventually get wrecked. Now, there's probably some financial undertones to his life that allowed him to lose 500K. But the reason why I tell people not to trade is that I know most people getting into traders, there's no way they could recover from a $500,000 loss. There's no way that most could recover from a $50,000 loss. There's no way that a lot of people could recover a $5,000 loss. And that's why, eventually you will get wrecked. Hopefully it's at the lower end. But another unpopular opinion is that some of these big traders too, they're not playing with their own stash. They have affiliate links. And so when they're trading and you've clicked on their link, they get deposits. It's like they get raked. They're raking your trade as well. So they're not living in a true economic paradigm. They have money coming in from another source that you, as a retail trader following them, don't have. So when you, as a retail trader, lose your money, there's no rake. There's no exchange dumping some money into your account the next day, every day ongoing. So just be aware of that, be cognizant of that as well.
Mm-hmm. Okay. So Piano Matty B, what's the number one thing you see in real life, talking to all of the people that you do? You also have your own YouTube channel. You've been in crypto for quite a while. You know a lot of other YouTubers. You're known by many different communities and many different people. Which is the number one thing that you see that wrecks people the most in crypto?
I have to say it's thinking they can be traders. It's a weird thing because so I compare it to this. When I was in my early 20s, I was in a band, and the brass rail of being in a band was a record deal. You know, the band, hey, this band got signed. Are you going to get signed? Can we get signed? Are we going to get signed? It was that was the pinnacle of being in a band, was to get signed. Now I think the pinnacle for people that get into Bitcoin is to be a trader. Trader is like the sign band. It's like the Nickelback of investing. And as I found out later from some friends who did get signed and had the record deal, it just wasn't what it was all cracked up to be. And they ended up not watching a lot of it, or not benefiting from it. So I think when people become traders, their life changes. And unfortunately, I know this is a bearish stream, but I mean, like I said, my legacy is to stop people. I don't want people to trade. I don't want people to get wrecked. I want people to prosper and keep their Bitcoin and never lose it.
We actually have a lot of bullish live streams. I think this is my first bearish live stream. Oh no, actually,
Leave it
I
to
had
Piano
one.
Matty B to bring in the bears, eh?
Yeah, I had a live stream with who was it? Army Piper. That was proper bearish, but he was right. He was right. You know, nothing past that man. He's very good at what he does.
Well, the truth usually is a little bit depressing, and people don't want to hear it. They like there's a saying as a YouTube creator, it's always be bullish, right? So if you're putting out content, if you're not always being bullish, people will, not generally not like your content, because they want that dopamine, that reassurance that things are going to be okay and the price is going to moon. So do I. I want that reassurance too. So when you're talking about some hard facts, it's not the most bullish information out there.
Quick shout out to 37 Hopper. So Piano Matty B, what piece of advice would you give to people to help stop them getting wrecked? Apart from not trading, because I know we've got a lot of traders in here and they're not going to listen. They need to know the hard way.
The reason why it's such an unpopular take about trading is that it's a complete lose-lose for someone like me to say that. So let's for instance, someone on this stream is like, no, I don't, I'm going to be the Nickelback of trading. I'm going to get that record deal. I'm going to be a professional trader. And let's say they go out and they try to do it. I want them to succeed. I want them to make a ton of money. But let's say, just like most of the amazing traders I've ever met, they get wrecked. Well, they're not going to come back and say, oh, you know what? You were right. Yeah, I shouldn't have traded. They'll just disappear into financial oblivion, and you'll never hear them. That's the worst thing for this industry. This industry needs long-term Bitcoin hodlers. And the more we see traders, I think that's why, you never see them again. And now I don't think that's the reason retail hasn't come back into Bitcoin, because they're trading and they're just too busy to come back. I think that they just don't have a lot of money, and the normal person isn't getting a check from the government to put into to Bitcoin, and the law of large numbers is hard to understand. So when the price is over 100K, like, let's remind everybody, Bitcoin's 108K. That's unbelievable how high this is.
Yes.
But when you suggest it to your normie friend for $1,000, they're like, well, let's say it 10x's. So I turned 1,000 into 10,000. I don't know. Is that great? The answer is yes. It's a 10x for Christ's sake. But people just don't connect it anymore. They want that high time preference. They want, sure, if it's going to go to 10, if I'm going to 10x, can I have it next month? I don't want to wait, 4 years to turn 1,000 into 10,000, which I kind of understand. Those days are over. But once they dip their foot into that orange pill, their time preference will change, and then that 1,000 turns into 10,000. And if they're disciplined enough to not sell it at 10,000, well, that 10,000 will turn into 100,000. If they're disciplined to not sell it at 100,000, that 100,000 will turn into 1,000,000. Just by what? Doing nothing.
Mm-hmm. Mm-hmm. I must admit, I do agree with that. I really, really do. When it comes to Bitcoin, that's the only thing I would do. HODL. I would never, ever, ever sell my Bitcoin. And the day that the governments come in and they say, "Oh, what's its name? You can sell Bitcoin, and you don't have to pay any tax, and you can blah de blah de blah." I know that day, I've made it, because they don't come in and they don't say things like that unless it's to benefit them. They want our Bitcoin, if that makes sense.
That's right. Yeah.
So when they come in trying to act all the hero, that there's something something behind it. Piano Matty B, it was absolutely lovely having you on the show today. It was a bearish show, but when you think about it, there's so many people out there suffering now. There's not enough, people don't have enough money for day-to-day essentials and all the rest of it, and they come into crypto with this get rich quick mindset. So sometimes we do need to be bearish. Long term, I'm still stacking Bitcoin. I'll always stack Bitcoin. I'm done with my altcoin bag. This is the year for me to exit the market with my, hopefully with gains when it comes to altcoins. But with Bitcoin, I'm stacking at literally any time, because I have a long-term mindset, 20, 30, 40 years, or the end of my life, if I'm completely honest, and then obviously give it to my children, great-great-grandchildren. But thank you so much for coming on and sharing your wisdom with us.
Thanks for having me. I've been enjoying watching your channel grow and watching these great Bitcoin stories. It's great.
Awesome. That's brilliant. And thank you for everyone watching. Thursday we've got the lives. Thursday we've got the premiere of the story. There's so much in that story. It's unbelievable. It's like a Cinderella story where you go from nothing to everything, and then then you lose it all, and then again and again. Like he has had a yo-yo of a tale, but he's in a very good position now. So there's a lot to learn from other people's stories. And then next week on Tuesday, I'll be doing a solo live stream, and I'll be talking about institutions. So on the channel, we've spoken a lot about how governments are stacking Bitcoin, how governments are adopting Bitcoin. Let's look at the institutions. Like I said, if you look at it, these institutions are raising millions and millions of US dollars, not for, making more products, or another plant, or advertising, or shilling, or other products, or all the rest of it. There's so many things that these institutions can do with millions and billions of US dollars, but they're raising it to buy Bitcoin. We are so early into Bitcoin. It's absolutely amazing. All the countries are getting in, the institutions are getting in. But bear in mind, most of us were here before most of that happened, before the governments got in. That's brilliant. Thank you so much, everyone, and we'll end it there.